ETFs, exchange-traded funds, are investment funds that are traded on stock exchanges, just like individual stocks. ETFs are designed to track the performance of a particular index, such as the S&P 500 or NASDAQ, or a specific industry or sector. They allow investors to gain exposure to a diversified portfolio of securities, often at a lower cost than traditional mutual funds. When it comes to choosing the best ETFs to invest in, it's important to consider your investment goals, risk tolerance, and time horizon. Here are some general tips. Choose ETFs that align with your investment goals. ETFs can cover a wide range of asset classes and investment strategies, so it's important to choose ones that fit with your investment goals. For example, if you're looking for a long-term investment with low volatility, you might consider a broad market ETF that tracks the performance of a major index like the S&P 500. Consider the expense ratio. The expense ratio refers to how much of a fund's assets are used towards administrative and other operating expenses. Because an expense ratio reduces a fund's assets, it reduces the returns investors receive. ETFs typically have lower expense ratios than traditional mutual funds, but the costs can still vary between different ETFs. Look for ETFs with lower expense ratios to maximize your returns. Diversify your portfolio. ETFs can be a great way to diversify your portfolio across different asset classes and industries. Consider investing in a mix of ETFs to spread your risk and maximize your potential returns. Some popular ETFs include SPDR S&P 500 ETF Trust. SPY tracks the performance of the S&P 500 index. Invesco QQQ Trust. QQQ tracks the performance of the NASDAQ 100 index. Vanguard Total Stock Market ETF. VTI tracks the performance of the CRSP US Total Market Index. iShares Russell 2000 ETF. IWM tracks the performance of the Russell 2000 index, which includes small-cap stocks. It's important to note that no investment is completely risk-free, and the performance of ETFs can be impacted by a variety of factors. It's always a good idea to do your research and consult with a financial advisor before making any investment decisions.